Hello, James here. Again, we're in Santa Fe, New Mexico, and what I want to talk about today is the difference between the corporations and the business trust, just on a basic maintenance level, the paperwork that you got to go through, and just the simple differences. With the state-sanctioned entities, which we call the corporations, the LLCs, the partnerships, you have all these requirements that you have to go through with the Secretary of State. And you probably already maybe know some of these things, but you've got to do your name registration, you got to do your listing of directors, your officers. If it's an LLC, you've got your manager of the LLC. And then you also have to have a resident agent. In addition to that, you also have annual record keeping that you need to do with the corporations and to a lesser extent with the LLC. And then also, at least in the state of California, you have to pay a fee to the Franchise Tax Board. It's called a franchise tax, which is basically a privilege tax for doing business in the state of California. It has nothing to do with whether the business is making any money or not. It's just a privilege tax altogether. So these are the requirements that you have with the corporations and LLCs. And you also have this maintenance that goes on with the corporations and LLCs. Every year you've got to do your annual filings, you've got to update your paperwork, you got to have this resident agent one more time. You got to pay all these fees. And again, the franchise tax. Now in contrast, what we advocate, what we like to use, and that is the business trust in contrast to those state entities. Okay, with the business trust, you just do it once. You get it set up, you don't have any registration with the Secretary of State, there is no franchise taxes to pay, there are no obligated record keeping obligations that you have, there's no resident agent, there's no franchise tax to pay. It's a completely free form, if you will, type of organization that you get up for holding title. Now, one of the other main differences between the corporations, LLCs, and the business trust, and that is the visibility factor. Because of the fact that you've got the corporations and LLCs registered with the Secretary of State, you've got this visibility factor that can cause you risk. Because of the fact that emails, your addresses, phone numbers, names, and so on are all listed with the Secretary of State. So anyone can go to the Secretary of State database, look up the information on Santa Fe Corporation, and they can find out who was the person that incorporated the company, who is the president, who are the other people involved in the company. Not necessarily the stockholders, but the organization itself. That's all registered. And the point here is that the internet has changed everything with asset search. So your corporations and LLCs, they're all easy to look up. In the old days, it was difficult to look this stuff up. And this is one of the reasons why we like using the business trust. So the differences between these two different types of organizations, or different categories, if you will, is that you've got the state regulations that tell you how you've got to run your corporation and LLC, and then you've got the business trust where they're completely up to you, how you want to design them, how you want to operate them. There's no restrictions on them. Corporations and LLCs do have state restrictions on them. In summary here, we advocate using trust structures, trust instruments for holding title. So whether it's to your business, whether it's to your real estate, your antique collection, what have you, we want to take those assets, we want to put them, they want to have their own legal title, if you will, they want to have them separate from you yourself personally, but we don't want them on the public radar screen. So those are the differences, if you will, between the state-sanctioned entities, the corporations, LLCs, and the trust instruments. So you got two different ones. You got maintenance, you've got franchise taxes on one side. You don't have any of that on the other side. We like that invisibility factor and that low maintenance that we have, or actually no maintenance, if you will, with the trust instruments. So I hope you enjoyed this video. You're welcome to share it, and we'll be in touch with you again very soon. Thanks very much.